Joining us today, before we go into the management accounts and into the practicals of today's, sitting here, I wanted to, first of all, introduce Keshni to everyone here. Keshni is an old friend of mine, and she is an angel investor, a venture builder and advisor with more than 2 decades of experience in strategy, M&A, which is mergers and acquisitions, and corporate innovation. She has executed over $4.5 billion in transactions in her career, from angel investments to initial public offerings, IPOs, across Africa, and now channels that expertise into building the continent's startup ecosystem. As a managing director of the Founders Institute, the world's largest pre-seed accelerator, she has guided hundreds of entrepreneurs and developed a strong pipeline of scalable investment-ready ventures, driving job creation, financial inclusion, and digital transformation. Keshni has also served, or is also serving currently, on the investment committee of Josie Angels, South Africa's leading angel network, and is the founder of a company called Investable, a firm bridging direct foreign investment, corporates and startups to unlock innovation and impact. So I think we are all very privileged to have Keshni here with us today. Keshni is going to talk to us about financial management and the foundations of investment readiness. And then we will go into the details and the nitty-gritties, hands-on, of what you need to do and how to get your management accounts, because management accounts and doing proper documentation is a very vital part of financial management. And Keshni, thank you so much for joining us here today. And the floor is yours.
Bertha, thanks for inviting me. And it's always awesome to do these collabs with you, because we meet at so many functions and so many places where there's so many founders who have so many questions. And it's particularly around fundraising. So everybody who's here, thank you for joining us this evening. We know it's supper time, so I hope you grabbed your whatever you're eating. And you've got your pen and paper ready, because this is actually going to be quite fast and we're going to get through it very quickly. Because the stuff that Bertha is going to get to in the demo is going to blow you away, and it's something that is vital for everything that you need to do and have in place before fundraising, right? And so, Bertha, I know that was a very long intro that I shared with
That's
you.
All right.
But thank you anyway for having me. To the founders, please put your questions into the chat box if you do have any, and we will get to it shortly. So let's see. I'm going to just jump right into it, because I know, and I based the presentation today on all the things that founders usually ask me. And when founders go on and they pitch to funders, they pitch to investors, there are so many things that get taken into account that founders, there's no way as a founder you can actually account for every single one of those aspects. But one of the most crucial aspects that you need to have in place is your finances. And if you I don't know if any of you guys have ever done a Dragon's Den or watched Dragon's Den or any of these shows where people go up and pitch and they automatically asked about their numbers. That's the first thing any investor gets into, is what are the numbers? What are they looking like? And as a founder, if you can't explain where your money is going, how much you are spending, what does the cash flows look like, you've already lost most confidence in your investor. Your investors have already lost confidence in you. As a founder, you need to know the numbers. There's no such thing as my accountant knows it, this person knows it, we'll get it to you. No, as the founder, you need to know these at the top of your head. And I gotta say, I've been guilty of this in the past, and it's burnt me, and that's why I'm saying, do not do that. Learn the numbers, know what it means, and know how to interpret them as you go. So having this in play is very, very important. The other thing, the next thing is, you normally see forecasts and you see actuals. And in reality, forecasts and actuals never match. But what we are looking for is looking at what are the projections that you made, what are the assumptions that you built your projections on. If we can stress that as investors, we can tell you exactly where you are possibly going wrong, right? In relation to a number of other points that are taken into account when calculating certain forecasts. And so when there's this large disparity between what your projections are and what the reality is, it gives a very good signal that the founder or the accountant or whoever put those forecasts together is not actually in touch with either the business or the market that they're actually operating in. So understanding how to forecast and how to make sure that you can explain the differentials between your forecasts and your actuals that you've gained is quite important. And the only way you're going to do that is by having a proper financial system in place. The third thing is mixed finances. Now, when you're starting out, sometimes you'll use your business card, sometimes you'll use your personal bank account. Most founders use their personal bank accounts to transact. I'm going to tell you straight up, don't do that. You don't have to have a registered business to have a business account. You can go to any bank and say you are a new business, you're just getting off the ground, you're under 5 million. And for example, with FNB, and not that I am punting them or marketing them in any way or affiliated with them in any way, but they do have an account where you don't pay any fees, right? Capitec, I think, has something similar as well. So you keep your personal banking and your company banking very separate. It's important for SaaS, it's important for investors, it's important for a number of things to keep that wall in place. Because you never know when things get out of hand. Sometimes people will be like, oh, I just had to pay this little bill or that little bill. And then that little bill becomes 10 little bills. And those 10 little bills amounts to a lot that you can't account for. And you can get penalized in a number of ways, not just by investors, because investors can obviously overlook that and understand and normalize the numbers based on the explanations and proof. But, in terms of your compliance and SARS and all those things, that can become quite messy and can end up in penalties, which does not look good on your track record. The other thing that also gets investors put off is if you don't have proper record keeping. So when you start off, we understand spreadsheets work, all of those things. But as you start growing and the business starts maturing, you need tools in place. You need to be able to keep clean records. And making sure that there's no missing data, the data points all meet. In school, if you ever did accounting, the first thing they teach you, for every debit, there's a credit, right? So understanding how all these things balance out and keeping good records is pivotal for you and your business. If I'm going too fast, I know, I do apologize, but and feel free to again drop in the chat. So with that, I know that these are probably things that you know about, the 4 C's that we're looking for. Do you have control? Can you demonstrate that you have control over your finances? Do you have clear processes? Do you have proper governance in place? Do you have systematic oversights over every single part of your business and showing how money flows through the business? You need to have this in place. Governance is key, and it's becoming more and more important as we grow as small businesses. The second part is clarity. Your second C is clarity. And clarity is not just about, for every debit there's a credit, but when you bring all your numbers together, your numbers tell a story. And so your financials need to be understandable, they need to be digestible. They also need to explain your business model. It will show. Your numbers will explain how well your business model is working that you have chosen. How well is the revenue model working that you have chosen for your business? Is it the right one? Have you explored others? And if you have, show those that come through and explain. Because sometimes you will be experimenting with one type of revenue model, and you would have to pivot and change. And all of a sudden there's maybe there's an uptick, or in converse, it actually dropped and tanked. In those instances, keep notes of what is going on and why those things happen, because being clear about it builds credibility for yourself, right? As the founder. Now, obviously, when you're going to banks, etc., and you're not sitting down with an investor, it's a little more difficult to explain those things. But when they start interrogating it with that fine-tooth comb, and if you've got the explanations and you have the proof to show it, it's a lot easier to get to an answer. The third one, consistency. So when you can, this consistency doesn't happen from get-go. We have to build the muscle in place that shows that consistency in how you report and how you forecast your if you can see and when consistency works both ways, it works the negative and the positive. So in the positive, when you've got a good habit of doing things and it's working for you, you will see it in the numbers. In the inverse, it's the same when things are not going right. You can see the number of wrong decisions that have been made, etc. There's a lot of things that a number will not explain and can be manipulated to look at something else. But it's very quick when you are used to looking at financials, what consistency looks like. And a lot of this comes from also having reliable systems underlying you at the end of every single month when you are doing your checks. And we're going to get to that in a bit. Your fourth C is compliance. Compliance. I cannot express how difficult it is when we try and fundraise for people, especially if we're going to say for example, the DTI or CEDA or one of these agencies that have funds available for small businesses, but businesses don't have the relevant compliance in place. And what do we talk about compliance? We're talking about your taxes. We're talking about any legal structures that you may need to have cleaned out. You may need to have your governance in place, your board resolutions, anything that if your business requires licenses, for example, all that is accommodated for, you can see in the financials, it's been paid, everything's up to date. And so everything from that perspective, it's not just your finances then. All those things will be reflected in your finances, and obviously when a DD is done and the income statement, cash flow, balance sheet, etc. is scrutinized, there's certain things that investors will pull out and ask you for supporting documentation on, very much like SARS actually. And so you need to have that in place to build that credibility as well. So when we talk about your numbers is not just a language. It's another language for your business. It's a language that if you're not in the room and somebody's looking at the paper, it's able to tell a story about where you are, where you're going, where you've been. If you've been in operation for a few years and you're not getting off the ground, people are going to go, why are you not getting off the ground? And they can ask you the questions. And take note of the questions that you're being asked very often, because those will give you a good indication of what people are looking for when they are interrogating your financials. It is also a very good time to get mentored in these spaces. So don't take that lightly. Make sure you have a note and find the different, analyze the data that's coming through from all those questions to figure out where your shortcomings are. Because sometimes people won't tell you where those shortcomings are. You'd have to pay another advisor to do that. Nonetheless, when we go into now the 4 pillars, right? Sorry, I wanted to put in all those animations, but my animations weren't working, so please bear with me. Everything's up on the screen already. The 4 main pillars, and when we have pillars, we have to have our little house there. So your 4 main pillars of good financial management specifically fall under structures, systems, habits, and documentation. And I'm going to just dive in very, very quickly what this means. In terms of structure, it is, do you have the proper setup and compliance in? And this is not from day 100. This is from day 1. What did you do from day 1? So it could have been a spreadsheet at day 1. At day 100 could have been a spreadsheet. But at day 365, did you have a system in place that is automated, it doesn't have to be an expensive system, but it helps you create structure within your business to help track everything you need in the business. So I'll give you an example. Again, I gave you an example. Separate bank accounts was one of them, right? For business and personal. For your tax, is it registered? Are you up to date? Do you have a tax clearance certificate? In terms of if you are working as a business, are you actually in a legal entity in the sense of, are you working as a sole proprietor, or are you PTY limited? Be very clear about that, because that impacts how taxes are done. It impacts a number of things in your business when you come into that. And also your shareholding. So when you have your shareholding structures and like who owns what share, etc. For investors specifically, this is very, very important. For debt funders and all those sorts of things, not so much. Sometimes it comes into play depending on collateral, who is ultimately responsible for payment of debt, etc. It's important to know who owns the business, and there's an identity, and people can go and track it if they're to do a check on it, for example, a credit check, right? So that's very important. Under your systems, this is the actual tools that you would use and the platforms for accurate tracking of everything across your business, whether it is your targets, your financials, it could be your CRM, it could be a number of other things, a number of tools in place that are required to run your business efficiently, or as efficiently as it can be for that particular point in time. Again, please take it with consider it where you are in the life cycle of your business. Investors as well as funders don't expect you to have everything or every tool under the planet, but make sure you at least have a financial system and a CRM or sales where you can track your sales, etc. And you have your governance in place, a proper folder structure as well for documentation, because when every single, whether it's the banks or it is an equity investor, they will ask for a due diligence room, and that has to be up to date from every single contract, every single financial statement that you have needs to go into there, and it needs to be properly categorized and saved. So systems are very important. You can look at Xero, you can look at Skhokho. You've got a number of tools. Sure, Bertha has built amazing tools and at affordable rates as well, which is amazing for our South African SMEs and startups. Easy to use, easy to onboard, easy to scale, right? So think about all those things in terms of how do you use an integrated system as well? Keep in mind that when it comes to systems as well, you don't want too many plugins. You want to keep solutions quite simple and easily, and systems that talk easily to one another, because then as you scale, it gets better and easier for you. Your third one, habits. Discipline is always key. So it's like, smoking becomes a habit, right? To break that habit, you've got to build another habit to break it. So the same way in your business, discipline is very important. How you make decisions in the business is very important. Making sure that your governance is in, making sure that you pass through the right resolutions in your business when you make decisions is very important. And that goes into documentation. Make sure every single thing is documented, which I've already mentioned. Because when you lack documentation, you start lacking credibility.
Okay.
The next one, I'm gonna do one more thing, but I know we're gonna can I get 2 more minutes?
Yes. I was looking at the time.
Okay, sorry. I was also just looking at the time. I'm so sorry. So when it comes to this, move from chaos to confidence by getting those things in place and making sure that you don't overlook what you think is the simple stuff. So this is what our funders and financiers and investors get out of your financial discipline is, can you manage your money properly? Can they trust you with the capital they're putting into your business? Do you understand as the founder and as the business manager the different levers you can pull and push in order to grow this business and repay back the funding or show a return? Is your business able to weather the shocks? And they can actually tell that from you, all the things you've got into place and how you make your decisions. And are you able to scale responsibly? Now, that was only...
I think we're going to have to really end it here, because
we are going to have to end it here, yes, because this is the last slide.
Yes.
This is the last slide. So make sure you organize your finances properly, because Bertha's going to get into this right now, and she's going to show you everything that is needed by financier. So thank you so much, and I'm going to stop sharing.
Thank you, thank you, Kashini. I think we will keep questions till the end, so that we can have a bit of time to get through the demo, because we promised you to show you how to use AI to create professional management accounts, which is foundational to good financial management and being able to account for where your money is going and being able to answer that question at any given time. Where is your business? So the two, can we all see my screen? Can you see, Kesh?
Yes, I can see your screen.
Okay, perfect. So please do type your questions in the chat, and then at the end of the presentation, I will go through the questions, including questions that you have for Keshni as well. And if we don't get through all the questions today, we will still answer them. Hence, please type them in the chat so that we'll make sure that we try to get through as much as possible. So I'm going to present to you an amazing tool that is called Skhokho today. Skhokho is a proudly South African business management platform, and we are trying to build solutions for the business owner. So the solution is specifically created for a business owner, small to medium-sized businesses being able to understand, so that they can use it to manage their day-to-day business activities. There's a lot that you can do on Skhokho, but today I'm going to focus specifically on how you can create management accounts. Management accounts are foundational to running a business. Every time you go for funding, every time you go apply, even for a loan, the other day we were applying for, getting into some program, they will ask you for management accounts because they want to understand where does the money come in and where does the money go out, and how are you managing your business? Are you making money? Are you losing money? What does your chart of accounts look like? And it might sound that like it's way too complicated for a founder, like you need you need like an accountant to help you through it, which is probably a good idea. But I'm going to show you here in this in this demonstration today how you can do a lot of this without. As a business owner, perhaps with the help of an accountant, but most of it you can do it on your own using a tool like ours. So where I'm going to start the demo is inside of our financial management application. If you go to the platform, and the link I will share in the description later on, and you register an account, you will land on the dashboard, which looks like this. And if you land on the dashboard, you can go straight to financial management. And on the financial management page, you'll be able to start to understand what your chart of accounts looks like. The very first page you land on is what we call the chart of accounts, and this is the foundation of your business financial management, because this is where you decide that in our business, think of accounts as cost centers. So what are those cost centers we have in the business where money flows in and out of? So you could say, for example, a cost center is payroll, and payroll money flows out of it. Or I could have another cost center that is called assets, PPE, and maybe money flows into or out of it. There could be debits on credit. So an account is specifically just a cost center where money flows in and out. And at the end of the day, the balance of money flowing in and out will determine whether or not your business is profitable or not, right? And we pay accountants quite a bit of money to do all of this for us. But as a business owner using specific tools, you can try and figure it out yourself. So this, at first, I wouldn't worry myself too much about. It will start to make sense when you start to look at the actual bank statements and the line items. So I'm going to skip everything from quotes, invoices, expenses, and bills, and I'm going to go straight into the bank statement parts, because this is where the journey starts when you start to build management accounts. There are many ways in which you can do it, but we find that using bank statements is one of the most, at least what we call auditable ways. So Keshni mentioned earlier on that you need governance, and you need to be able to be auditable. So you need to be able to prove after a period of time whatever accounts you give to a person and say this is the management accounts, you need to be able to backtrack it into a system or a tool that is verifiable. And obviously bank statements are not created by you, they are created by a third party. And if you at least you start basing some of your management accounts on it, you can be able to audit back the financials and what's going on. So we are going to look at how to work forward into building your management accounts from your bank statements. So if you go into this page, and I will share this video at the end of the presentation, and you can go through it, and you can try and go through it in your own time and play around, and hopefully log into our platform and upload some statements and see and try it out for yourself and see if it makes your job easier or not. So on the bank statement side, if you land here, you will see the first thing you want to look at is your years, right? So because we have financial years, and then you're going to decide where does your financial year start, and which year are you doing the statements for. So I'm going to go into 2024, which is a year that I've already sort of sampled and did statements for. You will see we'll have from the beginning and the end of the year, and if you go back to 2025, you will see some of the boxes have different colors showing you the different state. So when you get started, you are able to upload a bank statement here. So if I go to 2023, perhaps a year where I haven't uploaded anything, when you come here for the first time, this is what the page will look like. On this page, you will have a button that says upload, and then you will upload a statement. Once you have uploaded a statement, it will then look like this, where it will say you must process that statement. And this is where we use the AI in the background. So we did promise that there will be AI-powered management accounts. That's exactly what it is. It's going to take a lot of the thinking or the heavy lifting out of you, so that you're only left with perhaps reviewing what the AI has done, right? So once you've uploaded it, you'll just press a button. It takes about 2 to 5 to 6 to 8 minutes, depending on how long your bank statement is. It will process that statement, and it will break it down into the chart of accounts that we've already discussed at the beginning when we landed here, and we discussed the cost centers. So the AI will literally break down your bank statement into those different cost centers. And I'm gonna pick a month like February, for example, which has already been processed, so you can see what the AI actually does. So the AI goes through all of your line items, and it decides, or it at least makes a decision on a high level, what that line item looks like. Does this look like is an expense or revenue, and what is the probability or the confidence? So the whole point is using tools to make your job easier. So after you've processed, you land on a page like this, and the majority of your transactions will already have been classified by the AI according to its sort of internal brain and how it has been trained. And honestly, we've done this with a couple of bank statements, and the AI itself will also tell you the confidence. So you have a column here on confidence, and perhaps that's where you can go and dig deeper, and maybe it's not quite sure if this is actually wage and payroll salaries, and it thinks maybe 80%, it could be that. So you could come in here and adjust it and say, okay, maybe this is not payroll, it's something else. So you are able to do that. And sometimes AI also gets it wrong. It could show something as a credit or a debit, and it should be the other way around. So you'll see a button there. So if this was a money coming in instead of money going out, you can just swap it around, and then it will be positive instead of negative. Or I'll swap it back because it was right the first time. The point is, the heavy lifting is done for you. So once you're done with this, you can go back to, so this is the part where you process the bank statements. When you're done processing the bank statements, you can then go and get your generated management accounts. So those management accounts are actually created for you automatically in the background as soon as you process and approve the bank statements. Because as soon as you assign all those line items into the different accounts, then the management accounts are created for you. So you'll see I've only processed January and February over here for 2025. Therefore, those are the only months that I can actually view reports for. I'd have to process the other months to see what those reports look like. The AI will generate for you a cash flow statement. It will generate a profit and loss. It will generate a trial balance and a balance sheet based on those transactions for that month. And then you can now, for example, look at a profit and loss statement that has been generated there, and you can even open it up and because you'll see a total, so it has calculated $5,000 total. You can open it up and check how it, what are those individual line items. We are obviously using trial transactions here, so some of them are going to look very similar because we sort of generated these bank statements. They're not real, but in real life, if you actually put in real bank statements, you would be seeing those specific line items that are coming out of your bank statement. So you'll be able to remember that, yes, indeed, this was a revenue, this was an invoice, this was money coming in. And if you had misassigned a line item, you can easily just, you can easily go back to the bank statement I'm going to open it up in a different window. You can go back to that statement for that month, and you can reassign it. So if that was wrong, you can go back and put it into a different category, and then it will just refresh on this page. So you've got your cash flow statement, which is ready to be sent to your investors. And what we recommend that people do, or especially if you want to stay ahead of your financials, what we have been doing internally is to do this on a monthly basis. So when you're met with an opportunity, an investor knocks on your door, or you are applying for for funding, or even a loan at the bank, and then they ask for this, that's not the time to go and find all your bank statements and send them to an accountant to quickly make you management accounts in a rush, where you're gonna get some transactions incorrect. This is like a daily activity that we do on a monthly basis. As soon as a statement is available from the bank, we put it in here, we process it, we go through it in the management reviews, and then we make sure that everything is correct, and then the bank statement is done, right? So now we've got the reports ready, and you can do this in a space of, honestly, less than 30 minutes. If you just sat down and did it as a business owner, and perhaps to save you time, and if you wanted to then get it audited later on by a professional accountant, that's when you would then invite them into Skhokho, and they could log into this. So Skhokho itself, as a online cloud-based solution, has that flexibility, right? Where you could, if you go into your organization, you can actually invite other people. So you wouldn't be able to invite your auditor, you would be able to invite your accountant. If you had a third-party consultant, for example, like Keshne, who's helping you out with your financials, and they're trying to make sure that everything's right, you could invite them, and they could view everything where you are building. And so you have one source of truth, instead of having physical documents that you're sharing in a folder that is fixed, and then people have to write you notes. They could come here, and you could invite them and give them access only to this part of the application, and they could work with you through it until you get your chart of accounts right, and you get you assign your transactions in the right place, and everyone is happy that these transactions look good, right? And then it's also easy to export out. So we built in the functionality to easily just print it and save it as a PDF, so you can just download it and email it to somebody. It's very straightforward, easy to do. Now, what Skhokho also does in the background, which I think is going to be valuable for a lot of entrepreneurs in saving you time, is our AI-powered reconciliations. So what our AI-powered reconciliations do, it's an AI agent that runs in the background at a specific time during the day, and it's going to go through all your transactions that you have in your bank statement, and it's going to say, okay, if I look at this transaction looks like it's an asset. This means I should have an asset registered for this transaction. So for example, I bought a laptop, and it's a MacBook Pro, and I bought it for 20K. It's in my bank statement, and I didn't register it as an asset in my business, right? But the AI can see this should be an asset in your business. So what it will do is we have integrated our asset management sort of functionality in here. And if you go onto it and you go into our assets, you will see there's a bunch of assets that have already been created, and these assets were not created by me manually. These assets were created by the AI in the background as it's doing the reconciliations. It's looking at the bank statement. It's saying, these pickup trucks that you bought for this amount of money, that's an asset. So you should actually register this inside of your asset register, so that when you do your balance sheet later on, you can be able to show that you had an asset, or you spent money on an asset that went in and out. So that's the power of being able to get things right. Another thing the reconciliations do is it will also reconciliate other transactions like invoices. So if it looks at your bank statements and picks up an invoice, and it looks back at your invoice list, it will be able to say, oh, so this invoice, you still have it as sent. Maybe you hadn't updated the status of it, and it would automatically reconcile that for you. So and then the ones which it hasn't reconciliated, it will leave it here for you, so you can see where it's finding a discrepancy. And I think that's a very useful tool to save small businesses money. And one of the last things I want to spend some time on, maybe a little bit spend more time than this one, is the reporting, right? So after you have loaded your bank statements, you have a management accounts, you can print them out. You want to be able to share them with people in a way they can read. So the reports are shown here on a sort of month to month basis, and you can see the transactions you have, and you can see month to month the reports that have been created for you by the AI. What you can do is you can actually reorganize this data to view it in your own way that you want to look at. So let's say you've got your quarterly reviews, like we have in our case. You could pick the kind of statement that you want to look at. You could pick you want to view it sort of, so this one will decide sort of the resolution that you want to look at the statement on. I want to look at it, on a quarter to quarter basis. And then you can decide, I know I've got 2024 in, so I'm going to actually start with 2024 January, the 1st to 2024, let's see, 2024 December the 31st. So I'm going to make this a whole year of 2024, and then I'm going to generate a profit and loss quarter on quarter. So the data can now be, you can now change the resolution of it. You can say, I want to see it quarter on quarter, I want to see it 6 months on 6 months, I want to see it year on year, and you can quickly download it for your quarter reviews, and you can see what you did, the different line items, in that period. And I think this is useful to be able to reorganize the views of the same data. So now that you have the data in, you can view it in many different ways. Another way you can view the data is visually, obviously, graphically, in a way that makes sense to you, because all these numbers, unless if I look closely, I can't really see what's going on. But visually, you can plot the information, and then you can see, when you look at it, here's 2025, let's go 2024, which has all the months. You can see, so we did, the revenue went up a little bit, and then it went down, right? And then the expenses sort of tracked it a little bit. You can visually see the differences here. That means this profit was way higher than this one, for example, and things like that. So being able to take the same bunch of data and view it in different ways is also valuable for many people. So you can even download this diagram if you want, and attach it into some of your other reports, and do that. And then there's other sort of ways to look at it. There's many other visual cues at the bottom here. But the point is, this all started with just a bunch of bank statements, and imagine how much time that saves you and how much effort putting all of this together manually with consultants and accountants takes, and as a business owner, probably you don't have a whole lot of time to do that. So our AI sort of functionality allows you to just input some statements, and then you get all of this out. And in the last 5 minutes, I want to so I can have time for questions in the end, I want to just cover something that everyone has to do, because I was just doing my reporting back to CIPC now with compliance. We're talking about compliance. They will deregister your business if you don't do your annual financial returns and you don't submit them on the CIPC website. So that's one of the things that every company has to do, whether you're making money or not. Even if it's zero, you're going to report a loss, you still have to submit and say this is how the business did for you to remain registered, right? So every business, there's no business that doesn't do this. And I know businesses that pay a couple of thousands and more than, to just get this annual financial statements. When you've got the management accounts in the system, you can actually use it to generate annual financial statements. So this functionality is really, really cool, and it also uses AI as well in the background. So over here, the reporting part, I can show you, I've got 2025, 24, 23. You can see for 2025, I only have 2 months of management accounts. So it's telling me I don't have enough data to run the AFS. But for 2024, I actually had 12 months of data, and I have enough to do the AFS. So the first time I came here, there was a little button that you could press, and that button would say, okay, do you want the AI to do your AFS for you? And the AI, and then you can say, okay, yeah, cool, go ahead and do the AFS for me. And then it's like a process that takes about 2 to 5 minutes, because it goes through all the requirements of, you know, the standards of getting an AFS in place, and then it's gonna let you know later that I'm done. When it's done, you'll see the little eye there, and you can click on it, and then you're gonna go to the page where your annual financial statements are. So you'll see we've tried to break it down into the different sections so that at least you can evaluate it a section by section before you print it out. So the overview obviously just talks to, you know, who's the directors of the business, who's the secretary, who's an auditor, because obviously to be compliant, you need to, it depends whether your policy says you'll be audited. If you're a small business, your policies, maybe you don't need to be audited, but you definitely need a secretary, and there would be a director to the business. So you can just update this information here very quickly. You know, these are the directors, these are the auditors, and so forth, so that there'll be a space for them on the document to sign and approve the statement when they're done. You set your currency, right? And you'll see at the settings of Skhokho where you can set your VAT number, your tax reference. So these are not created here. They're created inside of your organizational settings. When you create your account for the first time, you'll see a page that looks like, let me actually open it up here. You will see a page that looks like organizational settings, like this one. You just need to go up here and just update your information. So put up your logo, your business name, what your business does, your website, your VAT, your tax reference, and then across the whole application, all of these will come through. So this is pulled in from those business settings that you've already created. And then you'll see the balance sheet. There wasn't a lot happening here. The profit and loss, your cash flow, your changes in equity, your director's report. This is something that sometimes takes you a bit of time to write and put together, and many directors actually leave it to their accountant to do for them. So the AI, what it has done, can somebody like mute? There's someone with background noises there, the background, I can't see. Okay, so can we just all please mute our, okay, thank you. So what the AI does is it will consolidate all your management accounts because they're already in the system. It will look at the trends. It will look at what your business was doing. It will look at, you made money, you made losses, and it will write your director's report for you. And you can still come in and edit it. Obviously, do not submit what the AI has done without actually reading it and proofreading and making sure that it's correct. But you can come here and say, okay, fine, what does this look like? Okay, this is not what I'm planning for the future. So I could edit this, you know, and write something else that I am actually planning for the future. What did the business do? You know, it will look at that, and then your going concern, it will write your going concern statement, and some of this will be real numbers. It's actually picking up from the AFI, so it's not guessing the numbers that it's talking about here, and the analysis is real analysis based on the numbers that you have. And then the policies are, you know, basis of preparation. These are pretty standard, but it will also generate them for you. And the important part are the notes, right? The commentary notes in the financial statements. So this is something that actually takes quite a bit of time to get through, you know, but it will generate you at least an initial, what we call an initial round of notes. Of course, you must still go through it, and you must still read it, and you must still edit it, but imagine the amount of time it has saved you that you would have created them yourself from scratch, right? Or trying to talk to ChatGPT, which actually doesn't have your management accounts. So here you have the AI generating this from the management accounts that are coming from the bank statements which you have given it. So it's based off your real company's data, and no two different AFSs will look the same because your data will be different and your company is doing different things, right? So I think that's really powerful, and it saves you a lot of money. And then when you're done and you've looked at and you've gone through the sections of your financial statements and you're happy with what it looks like, you can just print it out, right? And it's gonna build it up for you, or it's downloaded it. So let me just get it off the download. It's going to build it up for you in a, where is it? Done. Okay, there it is. So it's going to create it for you in a like a proper PDF format, right? And those are the directors you set up initially for your business. They'll have to sign it up, and your auditors, and then it will put those notes and the directors report in the right place where it needs to be. It will have your company name, it will have the year end, so it knows exactly what needs to go where in your management accounts. In your AFS, it will then put in the different statements, from the assets, from your cash flow, from your, this is a cash flow, profit loss, and then the notes at the end, right? So it will then put the notes, and you can see the notes are also it will attach the numbers where the notes refers to. But this, I think, as a start, I'm not saying that you're going to take this and submit this to CIPC, but it is at least a start that saves you a lot of time and hopefully a whole lot of money to get you started as a business owner in just keeping your sort of financial management and getting those financial documents in place, and getting the AI in the background to do the heavy lifting, so that at the end of the day you can see everything we've been doing is just reviewing. So we started by reviewing the classifications it did on the bank statements. Then we reviewed what it has written for the AFS, and if you're happy with just reviewing what it has done, you can approve, because you'll see there are different statuses there. You can take it across the different statuses, and once you've approved the statement that it's going to be fixed, you won't be able to edit it anymore, and then you can print it out, and then your AFS is done. And I think what I found most useful about this, more than anything else, is just knowing where your AFS is and how quickly you can get to it. So when somebody calls you now and says, please send me your AFS, like, how quickly can you get to it? Can you find it? Do you have to go look for it in the emails or a couple of folders before you remember where was the last time you had it? So here with the system, at any given time, anybody asks you, like, even if it's in an elevator, like, where are your AFS? Can I please have a quick look at them? You can just log in. This is an online system. You can just log in, open it, download it, send it to them in a space of in a minute, right? So this is the power of having like a cloud system and a cloud solution that helps small businesses sort of stay on top of things, hopefully. So with that, I'm going to stop sharing and just leave the last minute to questions if there are any. And I see there is kind of a couple of questions in the chat. So the first one is, Keshni just sent the contact information. I will share it with everyone who was present. I will send the emails, and then I will share with everybody else. So the balance sheet requires opening balances. How are you generating open balances from bank statements? Okay, obviously you're not generating open balances from bank statements. We are just putting in the account. So think about it as account based. So there will obviously be some intervention that has to come in. So things like how much equity did the business start with, how much money the investors put in, those kind of things. Obviously you're not going to know those from the bank statements. You'll have to edit and manage those yourself. So if you look at our chart of accounts, you are able to edit that and put in, where did the, assets start, the equity, for example, what was the equity at the beginning of a certain amount of time period. So you can set those manually from the chart of accounts. Think of the bank statements as really just helping you with your management day-to-day accounts, which is your cash flow, your profitability and things like that. And the rest you can augment with manually editing your chart of accounts with obviously the evidence of how much equity, how much did you start with this year, or at least when you start to use the accounting system, and then from then onwards it will build up, whether it's a credit or debit going forward, right? The other question is, accounting uses an accrual system, not cash except for cash flow statement. Yes. How are non-cash items added to the accounts? So this is again where the chart of accounts comes in. I don't know if I showed this. Maybe I must just share my screen again. Maybe I went through it quickly. But this is augmenting what you are already doing. So if you look over here, where did we start? All right. So if you look over here, you can define, like you can create your own definitions of accounts, and it's not only controlled by bank statements. So you can, let's say we come in here and we want to talk about equity. Let me find equity. Where is it? Interest income. Okay, I can't find it now, but I think there is one for it. There it is. Okay, owner's equity, for example, or retained earnings. So this obviously it's not something you're going to get out of your bank statement, but you can manually adjust the credits and the debits that go into this account, right? And all of that will then be included in the management accounts, and then they'll be included into the your AFS at the end of the day. And the only thing the bank statements are doing is that they are helping you in filling in the rest of the accounts, which can be determined from your bank statement. So the rest of the accounts, like expenses that are there in your bank statements, the rest of the accounts like payroll, if you're paying people out of your bank statements, things like training and development, rent, the things which you can determine from it, you will then determine from it. But obviously that doesn't mean that this is your entire accounting. Obviously you still have to go and do the rest of the accounting, right? Is there a follow-up question there, or did I answer that? Okay. So what kind of text is required on a bank statement to separate transaction types? E.g., if I go buy something at Incredible Connection, how will the AI know if it's equipment, airtime, stationery, etc.? So there is nothing specific. There is no specific text or keyword that you have to give it. That is why it's an AI. It sort of uses generative AI and machine learning, and it uses natural language processing. So it will read MacBook Air 13-inch from Incredible Connection, and it will know that this is an asset that you bought at Incredible Connection, because that is what a MacBook Air is, right? So there is no specific keyword that it's looking for, but it's reading the entire thing, and it's guessing it based on your chart of accounts that you have. It will then assign it. So this is why you still have to go back and review what it has done. So the second page after the statements have been processed, you can still go back and review, and it will give you the confidence. So it's not looking for keywords, it's looking at a very high level. If I was traveling and I was at the Skhokho garage and I was paying for petrol, and this is a transaction for paying for petrol, it will put that into travel cost because this is petrol, this is Skhokho. It will read that into it. So that's specifically what the AI does. If I was at a restaurant and I was paying for a meal, it will put that into entertainment expenses or whatever it is. So it will read the transaction and understand what it is from a natural language processing point of view, and then it will assign it to an account. But you still have to spend the time and go through what it has done and looking at the areas where it feels the confidence is low, because it will also rank for you. Let me just show this again so that I can demonstrate what I'm talking about. Let me just share one last time. Where is it? Let me go into the statements, the ones that have been done, processed. So it will give you this confidence row, right? This confidence row is actually what tells you how confident it thinks it has guessed it right. So if you go down and you see like a low confidence, that is where probably you need to review before you go for the higher confidence, but you still have to go through it. Like all of this was assigned by the AI. I didn't. And I actually urge you to try and test it out and see for yourself the power of natural language processing and how it's able to just understand if this is plant hire, this is labor, if this is legal services is professional fees, because it's just, this is what legal services are, so it's like a person understanding that. That's why it's artificial intelligence. So there's no keyword specifically that it's looking for. It is assigning based on that. Okay. I think that was the last question. Is there any other question that anybody has? We have just a few more minutes. Otherwise, we can call it a day, and I will keep this recording and share it if anybody's interested in it later on. Any last questions? There's Mo says you'd like to participate. Do you want to just, I see some hands. Just unmute yourself and go for it. Unmute yourself and ask the question. Hello? There are two questions. There's a question from Mo, and then there's another question from, I can't see it anymore because it's disappeared. Yeah, the mute button is right at the bottom. Just unmute it and talk. You can just go ahead. There's just like a few more minutes left, and you can ask the question. Hello? Okay. All right. If there's no other questions, I'm going to call it. Thank you guys so much for attending this. I will make the recording available. Oh, there is one question here coming into the chat. Okay. How does AI ensure data integrity when management accounts are compiled from multiple sources like zero payroll and banking system? What safeguards are in place to detect or correct human input errors before the AI processes financial data? So I think what we need to keep in mind is the AI is a tool, right? At the end of the day, you are responsible for your own financial statements that you submit, that you create from your business, right? So AI is just a tool that you use. Hopefully, it's going to help make your job easier in the sense that it will reduce you spending 2 weeks creating these management accounts maybe into like a day, because it's the heavy lifting will be done for you. But I can't stress enough that you still have to go into what it has done and review everything that it has done as a human with your own eyes. You have the ability to swap things around, because I've seen sometimes it gets a negative plus the other way around. So we've added the ability to swap debits and credits and then put it into different accounts. So you have to manually check what the AI has done before you before you submit this to anybody. So the AI is a tool, like a calculator, that you use. It's still your responsibility to make sure that whatever it does is correct, right? So the safeguards is, you are the safeguard. You are the last person that's going to sign off that AFS with your signature. So before you sign that document, you're going to have read it and corrected what the AI has done. Just think about this as a tool that's there to make your job easier, not necessarily to replace and do everything, because we know that AIs have challenges with hallucinations. AI makes mistakes. AI can get things wrong, but it can still save you a lot of money if you are able to safeguard against those things. So how does the system adapt to industries with unique reporting requirements, such as mining or real estate? I think when I shared this statement, the financial statements with you, we did not even specify what industry bank statements we're looking at. I think I just shared with you what the AI did. So natural language is natural language irrespective of which industry you are in, right? So and when we are testing our tools, which we're doing a lot of testing, we are still in beta testing even right now for this system. We actually do load financial statements from multiple different industries that we try and see how it behaves and how it reacts. But at the end of the day, natural language, and intelligence is intelligence. So whatever industry you are in, you have very specific, you have money coming in and you have money going out. You have invoices, you have expenses, you have accounts, you have assets. So all of those are just defined differently, but foundationally they're the same thing. So our AI can adapt across multiple industry. The only sort of I wouldn't even say challenge, but like perhaps something that we need to probably develop ongoing further is when you have very, very long statements. Let's say you're like a really large corporate and your bank statements are like 100 pages long, right? Because we know AI has a context window and so forth. But up today we tested up to statements that were 40 pages long without having an issue, you know. So the context window is growing, but obviously if you are an ABSA with 100 million transactions in it, perhaps this is not the tool, right? But if you are a business that has anything less than 40 pages of bank statements to process, we can definitely do it, you know, with something like this one. And with that, it's 7 o'clock. I'm going to call it a day. Thank you so much for attending. We will send through this recording, and if there's any other questions, I will send an email including you know, cashlist information, and you can, you know, respond to that email with more questions. All right. Thank you, guys.